What are the charts saying about today's bounce back? Let's go off the charts to find out with Rob Slimer of Fund Strat Advisors. Rob, what are you looking at?
Well, there's a lot going on, obviously. I think that the key point is what we've seen with the NASDAQ or the Qs is almost a textbook pullback. 3 sharp days down that came on Tuesday, as Tim was just highlighting. And then we get this rebound. RSI, again, as Tim had just pointed out, is in that 40 to 50 range. That's a pretty typical range to see a bull market bounce from. So I think we do get a bounce here. But the question is, how much further does it go? Do we get a lot more upside, or is just a oversold near-term trading bounce, which is what my view is? Our view coming into the beginning of the month, September is going to be choppy. Obviously, that's a bit of a seasonal trade, but I think we still do a zigzag through the month. As we get through the balance of September, we're probably going to see some sort of low develop as we move into Q4. Very typical sort of seasonal low. And a lot of the stocks, a lot of the tech stocks like the Qs are back to 50-day moving averages, so you get that bounce. So technical traders almost have to cover, have to play the trade on the long side. But when you step back and you look at the weekly charts, and I think this is really where you need to have some perspective, step away from those daily charts and see what the weekly looks like. And that RSI in the bottom panel on the right-hand side, to me, still looks like it needs to do more work. I'm not a tech hater. I'm not a Tesla or Apple hater. I just think these stocks need to pause and consolidate and chew up some time and catch up with their longer-term moving averages. So, what does an investor do with that? Well, if you look at some of these tech names or some of the TMT names, like, the video game stocks, a lot of the work-from-home names, a lot of those names started to peak out in August. You can see that the relative performance in the bottom panel of this electronic arts chart started to roll over, and it's below the 50-day moving average. And there's quite a few tech stocks doing that. Semi-cap equipment names, Applied Materials, KLAC are good examples. But there's a lot of other stocks, and I think Karen was referring to this. To me, the cyclicals, I think the market is broadening out from that secular growth, work from home to return to work and an improvement in the economy. And some of the cyclicals are improving. So, we've been fans of cyclicals in general, adding that to your barbell. But names like, probably take some flack for this, but names like Uber, for example, look a lot like the airlines and the cruise lines. These are the stocks that haven't done anything since June 8th. And to me, those are much more timely and are starting to emerge. So I want to take some of that money out of the growth names on the bounce and add it to some of these cyclical names, because I do think that the bigger trend, the longer-term market cycle, is still bullish for stocks through year-end into 2021.
Rob, always good to see you. Thanks for the charts. Appreciate it. Rob Slimer of Fund Strat. This sounds like a post-pandemic portfolio, Guy. We were just talking about this yesterday. What does your post-pandemic portfolio look like? Yeah. And it might be an Uber, and it might be cruise lines, and it might be all these cyclicals. Here we are. That's what Rob Slimer says to buy.
Yeah, it's interesting. I hear what Rob's saying. But I tend to buy this pullback in electronic arts for a number of different reasons, not least of which we've seen moves like this before. And I do think these stocks, including like the Take-Twos of the world, are reasonable. And in terms of, I don't want to be all dour here, but I don't know when post-pandemic is. Nobody does, quite frankly. And if they tell you that, they're lying, from politicians on down. So I'd just assume stay with things that have been working, and that includes electronic arts and Take-Two.
Steve, you've been positioned for this, for post-pandemic, whatever that looks like, for a while.
Yeah, so you have to ask yourself, where is the next 30 to 50% going to come from? And it's not going to be the technology names. Those names have already hit the jackpot. It's going to be the chemical names, the industrial names, the material names. That's where it's going to happen. So you could play the post-pandemic. For me, it doesn't even matter if you recover as quick as you thought you were going to recover or not. It's where's the best value for your money right now, and it happens to be in value.
So going to the value investor, Karen, you're in names like, a lot of the tech names, Apple, Microsoft, et cetera, which Rob says could be in for a grind for some time. Why not go to traditional value? How do you justify the valuation of these names after such a run?
Well, so I do have traditional value as well. I have both. I like these. I do think, they're a little rich for sure, but I just have no faith in my ability to sell and know when to get back in. And then, I've talked about paying taxes and having that still Could I get out at the right time, in at the right time, and make enough of a spread to pay taxes? Or do I believe in the company in the long term? It's not going to trade at fair value all the time, sometimes rich, sometimes a little cheap. I'm hanging on for the long term, but I do have those other kind, those value kind. The one that has proved to be the most value, meaning it sucked, it hasn't worked, is the financials. So those are among the cheapest, and I clearly have exposure there. And I think if we do one day get to the other side, we will see those. Hopefully it'll be before then, but I think that's an area of real value.
Yeah. Tim?
I can't believe Karen just cursed on national cable TV.
It's not a curse. We're not going to get a fine or anything like that. There's no bleeps. It's fine.
All right. So first of all, to try to put my tech hat on, my technicals hat on, I kind of agree with a lot that Rob's saying. And what I said yesterday was, go back to the end of June, collect 200 and pass go, or whatever that expression is, and start again with a lot of these charts. And if you look at the triple Qs, that's somewhere around 245, which I'm not saying we have to go to tomorrow, but that is the pullback that takes you, back to where a lot of this stuff has run off. I think the housing trade, which has a lot of industrial to it, and some of that is materials and components, I think is alive and well. And copper above $3, even through all of this, is a very good sign for materials names.